A quick market update, broad overview. I guess what we're seeing here, mostly in Canada, US side of things. Just jumping right into it, I think well aware that basically, through last year, again, we've basically continued in Canada on this sort of declining trend of cattle numbers. We were down another 1% last year. Cow numbers only down slightly, and breeding heifers actually up a little bit. So overall, to start 2021, our breeding herd would be fully steady with the previous year, but it's still, we've got the smallest herd in 30 years. We've continued to see cow slaughter quite slow and really good demand on the breeding stock side of things. So I think assuming, if we get the moisture this year and a lot of ranch country, we're hopefully seeing some signs of stabilization right now. But again, we've still working off a pretty small herd. Limited, maybe limited growth right now, but I'll certainly need the market and weather conditions to go in our favor to turn this thing around. And we'll talk about grain a little bit more later too. I think the biggest driver here, obviously, and I think the bigger story in terms of the market perspective is from the United States. They went through a pretty massive expansion after their run up in prices 2014, 2015. Obviously, they had quite a shrunk herd, in 2014 after some droughts and such, and we saw the massive rebound in prices. But they went through a rapid expansion. They were over 2 million cows, that they expanded, almost 3 million beef cows. But they've started to see that shrink over the last couple of years, kind of hit a bit of a plateau. Beef cattle numbers there are down now $500,000. And, from a positive perspective, we're working through right now some of the probably thickest cattle numbers we're going to have to work through in this cattle cycle. Hence, fed prices have been somewhat disappointing. If we look at other commodities, if we look at the price of beef, wholesale beef, fed cattle prices have not kept up whatsoever. We're looking at record beef production. Obviously, as we work through, the backlog of cattle is done, but there are a lot more feeder cattle that were held over into 2021 due to COVID supply chain issues, and we're working through that and have a lot of cattle on feed. But, the light of the tunnel at the end of the tunnel is really starting to come in terms of these smaller calf crops coming to fruition, and really hopefully towards the second half of this year, we'll start to see more of the dollars being flowed back to producers. Some of the wholesale beef prices are at their highest level since the price spikes, barring last year's kind of crazy market with COVID, but some of the best beef prices in face of record production, which is very positive. We just need those dollars flowing to producers, and we'll touch a bit more on that. But at the end of the day, U.S. herd, we're going to be looking at some smaller beef production around. On the U.S. side as well, just briefly, looking at exports, these are monthly, kind of busy charts here, but you can sort of see the upward trend a little bit on the beef export side. Good international demand, obviously the bigger production supporting exports. We'll point out that, China is a relatively small buyer was a small buyer of U.S. beef and have come on in a big way. Some of the markets this year almost in the number 3 spot from almost being non-existent. So seeing even the China impact on U.S. beef exports. Japan has been strong when they got their tariffs reduced to meet TPP levels. A few hiccups right now as they do have restrictions, but they probably continue to see large exports as well. The big one is pork. Obviously, last year, 2020, China, with the ASF issues out there, obviously they took huge amounts of pork. The hog market didn't really show that, I think, with the trade wars and different things. But, China exports are down somewhat this year. But again, they're still historically very, very strong. And ASF continues to rear its head in China. Hard to say what's all going on in terms of, getting reliable news and data out of there, but seeing or hearing of resurgent cases of ASF in China again, which will likely keep them as, again, the major importer of meat in the world. One of the interesting part here is, a lot of the factors that are impacting beef and cattle, or let's say beef and pork, are the same. Both very strong prices. Biggest difference here is U.S. hog prices are, extremely high. They're at the highest prices since 2014. Their cutout prices is very strong. Difference there, they're seeing tighter hog numbers. U.S. first half, they're going to have less hogs, possibly less pork production for the first time in several years, that they're actually going to have a year-over-year decline in production. And again, the supportive to the hog prices. And I think, certainly relatively bullish moving forward, that, we can anticipate some better price response on the beef and the cattle side is what we're waiting for as we continue to work through numbers. But again, we've got, like I said, a lot of cattle on feed, and it's keeping our fed prices rather stagnant. Although that said, I don't have the chart here, but U.S. prices this week for the first time in quite some time have jumped up. They're about 116 US. They've been trading 114 for most of 2021, waiting for that price bounce. Hopefully we're heading into a pretty hot spring market where, US cattle production and slaughter can be elevated and keep pulling cattle through to help prices down there, which again is reflected in Canadian prices as well. Quickly on, exports been quite strong. Obviously, a growing trend of exports. We've been growing beef production over these years. Obviously the hiccup last year did restrict our exports somewhat. We were down a little bit, just slightly actually, once we get the finalized numbers in here. Beef exports were down, but on the other hand, beef exports on a value basis were record large again. So we were up to a little over $3.2 billion in beef exports. It's $1 billion more than where we just were 5-6 years ago when we were at like 2.2 billion. So we've obviously seen strong international demand on our exports and projecting very strong exports again this year. Again, good growth into Japan remains strong as well. For Canada, imports last year was a little bit of an anomaly. Obviously, when we had the slowdowns, retailers, it was mainly retailers were, trying to find beef anywhere they could to put meat on the shelves. So we saw that surge in the second quarter and followed through the summer to see imports up. But again, to start this year in January, they were down, and we'd anticipate lower beef imports coming into Canada in 2021. Also, again, lean trim countries like Australia is rebuilding their herd and has significantly less beef to be sold on the export market, which also bodes well. Less of that going into China supports that market and less coming into North America. So in terms of the slaughter last year, obviously the big story for most of the year was the backlog of cattle. This is weekly slaughter through the year. Obviously you can see what happened when Cargill was down and JBS was restricted. But again, they've made quickly, recovered and made up for it. We ended the year with fed slaughter almost pretty much flat with 2019, which was phenomenal. Given this gap was way over 150,000 head reduction in slaughter versus the previous year. We did kill less cows. We exported a few more cows, but overall the cow culling rate was down last year. So basically we've been through the backlog in Canada, and we continue to, so far this year, again, very good slaughter rates. Cow slaughter is still down. We're down about 16% in the West, or 10% nationally, where cattle slaughter is up, 8-9% over a year ago. So again, continuing to work through the cattle. Lots of incentive. Packer margins are, quite strong given where beef prices are relative to cattle, and we continue to work through the numbers and, again, hopefully bode well for the spring market. Price-wise, fed cattle prices, again, last year, was extremes, and hopefully doing year-over-year comparisons is not really relevant moving forward, but we're still below 2019 and the 5-year average on the fed cattle prices. Somewhat disappointing. We have rallied from last year. We were into the low 150s, but we've kind of dropped under 150 again. Which is somewhat disappointing, given, again, lots of things what we're seeing in the hog market and the beef market. We still anticipate a spring rally, and we'll just have to see how much leverage the cattle feeders can get back. But numbers should be tightening here for us in Western Canada. And then the other, this chart here is just showing the difference. Been a lot of volatility between Ontario and Alberta. Alberta started last year extremely strong. COVID hit the West a lot harder. Now this down this zero, so negative means Ontario was at a significant premium to Alberta for a good chunk of last year. But Alberta, again, towards the end of the year and right now have moved back to premium over Ontario. It's not as big as it was, but we're back to a slight premium over Ontario. Keep in mind, so just jump in, this is the Alberta, our Fed basis in Alberta has been incredibly strong. So this is basically saying Alberta is again moved, we've got the strongest prices in North America or in Western Canada. So despite us, we are at a premium to Ontario. You know, Ontario prices are about steady with the US after you convert things to Canadian dollars. So it's not a, you know, it's still a strong market. I think the big disappointment again is everybody's losing money, all of the feedlots at these finished prices. You know, we've got a lot of guys looking at break evens at 160 or more per hundredweight, and you know, we're not even getting 150. So still a lot of fat cattle moving out at $200 losses, $150, $200. Again, which is a struggle. Or I can see the frustration if you're dealing with packers that are making more than that per head. But again, basis overall is quite strong, and as I said, the US has got a lot of cattle on feed. Part of the reason our basis is if you look at US cattle on feed numbers, their market's been struggling as well to get going. As I said, it's maybe starting to into the spring, but they've pretty much got near record cattle on feed numbers. They had some storms this winter as well that restricted output and some plants that have been down for maintenance, but everything's hopefully back up and running full bore moving forward. But again, this is gonna weigh on our cattle markets. As I said, we've got a lot more cattle on feed. Whereas in Alberta, Western Canada, ours is down from a year ago. You know, we've just not had any profits for 2 to 3 years. You know, our calf crops are smaller, and we, you know, the way barley was, there's not as much appetite to place cattle here. So hence our basis is partly stronger because, again, we're not dealing with or careful what to call it, a backlog, but the increased numbers of cattle on feed. Price-wise, you know, as I said, it's kind of interesting. If you look at the Fed market being well below the 5-year average, Canadian dollars back to, you know, near 79, 80 cents, and feed costs being near record high, feeder prices are still, you know, right in line with the 5-year average. You know, seeing some pressure, which is seasonal, but you know, again, these high feed costs are holding the market back somewhat. And in Ontario and out west, you know, calf price is quite strong. Anything that can go to grass with you know, stay off grain for as long as possible, seeing good demand there. And looking forward, you know, looking at where the hog markets are, looking where cattle numbers are projected to be and beef demand, the cattle futures are all pointing to much higher prices, or somewhat higher prices, and that's supporting this feeder market because we're anticipating fat prices to be stronger going forward. We'll have to see in Western Canada. The futures are quite strong. You know, August futures, which are usually quite on the lowest futures contract, are actually higher than the April contract right now. We'll see if that comes to fruition, but that's basically saying we're going to get steady to higher prices this summer. That's pretty optimistic. We'll see if that actually transpires, but that is supporting these feeder prices, the higher futures, anticipating stronger fat market. Exports, trade-wise on the live cattle, obviously still a significant number of cattle, but that's come down as our herd has shrunk. And, you know, we've expanded our processing rates and such in Canada. You know, exports still hanging around 600,000 head. Most of that is fats and cows. But on the other hand, we're a net importer of feeder cattle. You can see, you know, last year we only exported a little over 100,000 feeders, and we were imported well over 200 or close to 270,000 head of imports. So again, we're a net importer of feeder cattle. That supported our beef production because we've actually, you know, in Canada, our beef production has grown faster than the United States has, simply due to keeping more cattle here in Canada and importing them from the US. So this is the green line here to start, or the green dot to start 2021. So quite elevated as they continue to come north. So as I mentioned, you know, if we look about the feeder market where it's at, you know, Canadian dollar, it's come back down here this week, but you know, it popped over 80 cents. 80 cents is kind of has traditionally been a bit of a ceiling or a floor. We'll see. I know a lot of this depends on the US dollar, obviously, and lots of news still swirling around the U.S. economy, our budget's coming out, but the stronger dollar is certainly a risk to the market. And here's a feed grain as well. Lethbridge barley's again 320. We're looking at $7 barley, close to $7 barley in southern Alberta. That's certainly a risk that's eating the feedlot profitability for cattle guys. It's placed calves earlier, as well placing feeders. It's less money you have to spend on feeders when you're paying that much for grain. We'll have to see what kind of crop transpires and how long or how big of demand continue to see out of China. But we should see a lot more barley acres and feed grain planted in Canada this year. So as I've kind of alluded to, this is just showing, and this is just kind of an index. I don't really want to get hung up on the percent number, but we're comparing a live cattle price. So live Alberta fed price relative to the US choice cutout in Canadian dollars. So again, basically what this is saying, if you're in the 60% range, there's not, and again, you've got to remember an animal dresses out at 60% from taking the live just to get to a carcass weight. So nonetheless, as you see this percentage drop, we've gone from 60% to 50%. Basically, packers are, that's their margins for the most part is, they're not having to pay as much for cattle relative to the price of beef. And again, that's just due to ample numbers, somewhat of a restricted supplies. Obviously, last year got rather extreme with COVID and plants being down. But they also weren't really making money if they're not killing anything. But nonetheless, I think this is where, I've seen it in the hog side of things is as this, we call it leverage. There's plenty of dollars in the system to be passed down through feedlots, and once into feedlot hands, they're a generous bunch to put that into the feeder and cow-calf producers' pocket. So we'll have to watch for that, but that should be working in our favor later this year, assuming processing rates continue at where they've been for the last almost 6 months, let's call it. So demand, export world global demand has been strong. I always usually like to point out the fact that we're selling more, we're exporting more beef, and we're doing it at higher prices. That's the best case scenario. Again, usually if you got more on the market, more to sell, prices go down with most commodities. But again, we've seen that for the last few years. We're selling more beef, we're doing it at higher prices. And again, domestically, it's a similar story this last year, despite all the concerns about food service down and economic uncertainty. Consumers continue to spend big time on beef. Their biggest expenditure on a protein is beef. Consumption held in fully steady, likely with the previous year, with 2019 last year, and retail prices were extremely strong as again consumers continued to buy beef. So certainly we hear a lot of noise of concerns about consumers' concerns about animal welfare and the environment and such, but for the most part, the general public, the average consumer is spending a lot of money on beef and willing to spend their dollars on beef, and cooking at home. They had the money this year to buy those better beef cuts. So we've had good demand internationally and domestically. The biggest sort of bottleneck obviously has been in processing levels. So key factors. See what I'm doing for time. Okay, what time goes. Obviously, I think the anticipation for the market side of things, everything's kind of aligned for the beef and red meat demand's very strong. Hogs are stronger. It's just a matter of when can we see these dollars come down to the producers, similar to what we've seen in hogs, etc., or even in the other commodity markets with the grains. Interesting, feedlots have continued to expand. As I showed, we've exported less cattle. We are net importer of cattle. So despite the cattle herd being at 30-year lows, feedlots are 15% higher than they were at the bottom. I think it was 2015, 5-6 years ago, and fed cattle slaughter has increased 29%. So we've got the competitiveness or the growth on the feedlot sector and the packing sector. There's even going to be a couple more feedlots that are going to come on this year, so they're not included in that 15% growth yet either. But again, we're going to see some hindrances. We've got ongoing feedlot losses. We don't have. There's a lot of empty pens, I guess. Let's say that way. So I'm not sure we'll continue to see feedlot growth we've seen over the last few years. but nonetheless, they have grown, and there's a couple more coming on stream this year. Herd stabilizing, as I mentioned earlier, some of the numbers pointing to flattish breeding stock numbers. But again, we got to contend with high grain prices. That impacts our price of our calves as well as the land use side of things. You know, how if the cow-calf producer's not profitable or not seeing enough profit, it's still a challenge for the herd to grow that way. Canadian dollar, obviously touched on the US dollar impact, what's going to happen there going forward. I think generally, so for the most part, there's a lot of pretty positive factors, I think, for the cattle market, bullish for fed cattle prices moving forward. But, you know, if we look at some of these risks, if you look at higher grain, or in years where you have a higher grain cost and a higher Canadian dollar, there really is a low probability of higher calf prices. There's not many years you get high grain prices and high dollar that you're actually going to see calf prices go up. You can argue, and again, sort of my bullish bias, you know, you could argue, well, and you can argue that prices were somewhat depressed this last year, COVID issues obviously hindering the overall market. So we're starting from a pretty low base, but we got to remember that risk is out there as well. But for the most part, I think my general feeling is we should see calf prices as strong as last year with quite a bit of upside potential. So I don't know, Miles, if you're going to fire that question back at me, but that's kind of my answer. I'm not going to pinpoint anything, but for the most part, I still see some more upside potential. Again, it's lots of variables there, but we're pretty well positioned. Sorry. I was going to mention just inflation. We're seeing commodity prices in general increase, and that could be supportive to the overall marketplace. There's a lot of years we see, you know, when the funds can buy grain prices, we see cattle prices go up. That's not uncommon. My concern really this year is where's this Canadian dollar going to go? I was going to go back and just suggest, you know, people check out our mobile site. We have Ag Expert. FCC teams help support that with their funding in AFSC. It's a free app to go check out futures markets and price insurance and some calculators on there for those who want to use that. In terms, and as I mentioned, actually my previous update, but you know, Canfax membership driven. Anybody can become a Canfax member. Cow-calf members, you know, we've got weekly reports, daily reports. It's $175 to get a basic Canfax membership to support us and our price reporting and the data to the industry that we provide. And again, associates and feedlots can get extra, or there's extra services as also available. And that is my presentation. That's my contact info. And I'm not sure if we want to open it up for questions, or I'm happy to take questions if anybody wants.